Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MCCORMICK CO INC quarterly report. McCormick & Company provides a wide range of businesses and services across two main segments: consumer and flavor solutions. Consumer segment manufactures and distributes spices, herbs, seasonings, condiments, sauces, and desserts under various brands, offers private label products to retailers, serves retailers through direct sales and indirect distribution channels. Flavor solutions segment supplies seasoning blends, spices, herbs, condiments, coating systems, and compound flavors to multinational food manufacturers and food service customers, serves food service customers directly and indirectly through distributors. The decline of McCormick & Co. Inc. stock price. A multifaceted issue. McCormick & Co. Inc.'s stock price has plummeted by over 15% in the past year, with several key factors contributing to this decline. The company's flavor solutions segment has been a major concern, weighed down by sluggish volumes among large consumer packaged goods, CPG, customers and subdued demand in certain quick-service restaurant, QSR, channels. Tariff uncertainties have also taken a toll on McCormick's profitability, leading UBS to lower its price target for the company. Furthermore, the firm's lowered annual profit forecast for 2025 has sparked market concerns, attributed to escalating tariff impacts and rising commodity costs. Consumer behavior shifts in major markets like North America have also contributed to the stock's decline, as consumers increasingly seek value by trading down to cheaper alternatives or purchasing smaller quantities of products. Additionally, weaker performance in the consumer business, a sluggish recovery in China, and a soft volume environment in the Americas have all taken their toll on McCormick's stock price. The company's long-term growth challenges are also evident, with modest annual net sales growth and operating profit increases over the past 5 years. With projected operating profit declines in the fourth quarter due to increased marketing expenditures and unfavorable financial factors, it remains to be seen whether McCormick & Co. Inc. can recover from its current slump. The primary drivers of revenue growth or decline are multifaceted, yet discernible. On the growth side, favorable volume and product mix, pricing actions, and organic growth contribute significantly. Additionally, higher volumes and product mix in the consumer segment, as well as favorable pricing actions in the flavor solutions segment, also drive revenue expansion. On the other hand, revenue decline is primarily attributed to unfavorable customer mix, increased conversion costs, and unfavorable volume and product mix in certain regions. Furthermore, foreign currency impacts have a negative effect on revenue growth in specific segments. Net income and profit margins. A mixed picture. The financial performance of a company has shown mixed results in terms of net income and profit margins. For the 3 months ended August 2025, net income increased by $2.4 million compared to the same period in 2024, indicating a slight improvement. However, for the 9 months ended August 2025, net income decreased by $10.5 million, suggesting a decline. Profit margins have also seen fluctuations. The gross profit margin (GPM) and operating income margin (OPM) both decreased from the previous year's figures, indicating a decrease in profitability. On the other hand, segment profit margins for the consumer and flavor solutions segments showed mixed results, with some quarters showing an increase while others showed a decline. The reasons behind these changes are varied. An increase in depreciation and amortization of $14.6 million contributed to the decline in net income and profit margins. Conversely, a decrease in stock-based compensation by $2.6 million and an increase in deferred income tax benefit by $21.4 million had positive effects on the company's financial performance. Overall, the mixed results indicate that the company is facing both challenges and opportunities in its pursuit of profitability. The company's financial performance indicates a consistent generation of positive operating cash flow over the years. Despite a brief exception in 2025, where negative operating cash flow was reported for 3 and 9 months, the overall trend suggests that the company has sufficient sources to meet its future cash requirements. This is evident from the positive operating cash flow in both years, as well as the ability to generate enough cash to cover its needs. The company's financial health has been subject to mixed trends over the past year. While there have been fluctuations in interest expense, with a decrease from $53.5 million to $50.2 million, and an increase from $37.9 million to $24.9 million, these changes are not significant enough to indicate a substantial shift. Similarly, the debt level has shown contrasting trends, increasing from $1,034.2 billion to $1,136.2 billion, but also decreasing from $4,970.8 million to $4,899.4 million. Overall, there is no clear indication of significant changes in either debt level or interest expenses throughout the report. The company's financial performance varied across different segments and regions. The consumer segment was a standout performer, with notable success highlighted on pages 23 and 28. In contrast, the flavor solutions segment struggled. Geographically, international markets outside of the U.S. excelled, as did Mexico, which is expected to continue its strong performance. The Americas and EMEA regions also performed well. However, APAC underperformed compared to other regions. Management's outlook on company strategy: the company is focused on improving competitiveness through organizational restructuring, page 11, and leveraging the recent acquisition for growth opportunities in Mexico and Latin America, page 23. To mitigate costs, management plans to implement sourcing and cost-saving initiatives. Financial expectations include a flat gross profit margin due to increased commodity costs, with operating income expected to increase by 1-3% and adjusted operating income by 2-4%. Brand marketing investments are also anticipated to rise by mid-single digits. Special charges of approximately $20 million will be incurred for organizational streamlining actions. The company aims to maintain a prudent capital structure that supports growth objectives while preserving investment-grade credit ratings, page 35. Management intends to fund future requirements using existing cash equivalents, and internal funds, with plans to complete the McCormick de Mexico acquisition by early fiscal year 2026, page 37. The company has demonstrated its commitment to returning value to shareholders through both dividend payments and share buybacks. In 2025, it paid out $362.2 million in dividends, a slight increase from the $338.3 million paid in 2024. The company also repurchased shares worth $29.2 billion in 2025, with a total of 382,000 shares bought back. These actions indicate that the company is prioritizing shareholder value and capital allocation. Concerns about inventory buildup or supply chain disruption exist. The company's financial summary reveals potential issues with inventory buildup and supply chain disruptions. The data shows a significant increase in finished products, raw materials, and work-in-process inventory, indicating a possible accumulation of stock. Furthermore, historical trends suggest that net sales and cash flow from operations are often lower in the first half of the fiscal year, which may be linked to these issues. Additionally, an analysis of accounts payable reveals higher cash usage associated with this account in 2025 compared to 2024, suggesting a potential increase in inventory levels. The company's supply chain is also facing challenges due to fluctuations in raw and packaging material costs and availability, as well as the ongoing conflicts between Russia and Ukraine and the war in the Middle East. These findings indicate that the company should closely monitor its inventory levels and supply chain management to mitigate any potential disruptions or losses. That concludes the financial summary for MCCORMICK CO INC. Feel free to comment below, and I will be happy to answer them when possible.